Most people think that you need 20% down to buy a short-term rental. That assumption is costing people real money and real opportunities. This buyer got into a $504,000 property in the Pocono Mountains of Pennsylvania with only 10% down and is running it as an Airbnb. Let me show you exactly how this deal was structured. What's going on, guys? Welcome back to another Deal of the Week breakdown. If you're new here, my name is Ricardo Carrillo. I run RC Lending Advisors. We're a nationwide mortgage lending company that helps clients all over the entire US get financing for both residential and commercial deals, whether you're buying your first home or scaling your real estate portfolio. My team and I will walk you through this entire process from A to Z. The whole point of these videos is to show you real deals, real numbers, and real clients, and exactly how they're structured so that you understand what is actually possible when you do this the right way. Jumping into the specifics, this property was a purchase deal that we helped a client acquire in East Stroudsburg, Pennsylvania, which is right in the heart of the Pocono Mountains. The reason why I wanted to break this down is because the financing strategy here is something that a lot of buyers either just don't know about or it's completely misunderstood when it comes to short-term rentals. Let's just jump right into it. This property is a single family home, 3,800 square feet, 5-bedroom, 4-bathroom house, sitting on just over a quarter of an acre. It's a solid sized house for the Poconos. Being a 5-bedroom, it's exactly the kind of property that performs really well on Airbnb because you can accommodate large groups, you can accommodate big families, weekend trips. This ultimately is the bread and butter of the Pocono short-term rental market. And so the client was able to find a really good property. The purchase price was $504,000. We ended up putting 10% down. We used a conventional style loan and we did it as a second home. That right there is the entire story of this deal. Let me explain why the loan type matters so much here, because this is the part that most buyers actually get wrong. When most people think about buying a short-term rental, they automatically assume that they have to go for investment property financing. And the moment that you go for investment property financing, you're looking at a minimum of a 15% down payment. However, in most cases and most banks, minimum that they allow for conventional financing is somewhere between 20 to 25% down, depending on the type of the property. The rates are also typically higher because lenders are viewing investment properties as higher risk. And if somebody is getting into some sort of financial trouble, they tend to protect their primary residence first before their investment properties. And so the banks understand this, and ultimately it's risk for them. So they end up going into higher interest rates and higher down payment requirements. Second home financing, on the other hand, is a completely different category. And it's one of the most powerful tools available to buyers who want to get into short-term rental properties, but also keep their down payment extremely low. A second home is a property that you personally occupy for a portion of the year. However, it doesn't have to be your full-time residence, and you do need to use it personally, but you don't have to occupy it for a specific amount of time. You can continue to structure it and use it as a short-term rental, because when it's correctly used as a second home, you can get access to conventional financing. This is what allows you to only have to put a 10% down payment, and it also gets you rates that are better and more closer to what you would find on a primary residence loan. Here's the question that I always get though: can you still put it on Airbnb if the property is financed as a second home? And the short answer is yes. In the Pocono Mountains specifically, short-term rentals are legal and they're very popular in this market, very widely operated by a lot of buyers. However, the client that purchased this property, they plan to use this property personally, and they also plan to use it as a short-term rental outside of that time. Really, the rule of thumb that we use is having to use the property for at least 14 days out of the year yourself. The rest of the time, as long as you have access to the property, you can have it on Airbnb. And it's completely within the guidelines for second home financing. That's why when it's structured correctly, you can do 10% down instead of having to come in with 20 to 25% down. You get to keep the rest of that capital available to go and deploy it on other deals. On this same purchase of $504,000, that difference is somewhere between $50,000 and $75,000 in just the down payment, which is enough money for you to go buy a second short-term rental. It's real money that stays in your pocket when you know how to structure the deal correctly, and you're able to then just utilize that for amenities or repairs or furniture or the next property. Let's jump straight into the numbers on this deal though. 10% down on $504,000 was $50,400. That brings our total loan amount to $453,600. We locked in a 30-year fixed interest rate for this client at a 7.25%. Principal and interest payment on that comes out to $3,094 a month. Homeowners insurance was $313 a month. Property taxes, specifically to this area, is county taxes and school taxes, which came out to $369 a month. The monthly PMI, or private mortgage insurance on this deal, was $71 a month. And then there's also an HOA for this property, which was at $122 a month. Total monthly payment came out to $3,970. Now let's talk about the income potential, because that's really what makes this deal interesting. The Pocono Mountains is one of the most active short-term rental markets on the East Coast. I have had countless number of investors purchase in this area. It's so close to New York City, it's close to Philly, it's close to New Jersey, and that's what gets you consistent weekend traffic year-round, regardless of what is happening with the season. A 5-bedroom property like this in this market that's also well managed and well listed could generate anywhere from $5,000 to $10,000 plus a month, depending on the season, the listing quality, and how aggressively it's managed. This is why it's so important to save your money up front on down payment so you can use it on things like amenities, which are going to get you more revenue. Now, I want to be clear though, because I'm not a property manager, and those numbers are going to vary, of course, based on your specific location and how your property is set up. What I can tell you though is that the monthly payment on this deal is $3,970, and if it was bringing anywhere from $5,000 to $10,000 a month, the income potential for this market is well above what you would be getting for a long-term rental, which clearly we know that long-term rentals wouldn't work in this market. Peak seasons would be the way to make your money on these types of properties when they're in vacation style markets. And that spread is what makes the deal work and why people want short-term rentals. Just like I always say, short-term rentals are a part of a 3-part return. You have cash flow from the nightly rate. You have equity that you're building every single month through principal pay down by just making your normal monthly mortgage payments. And then you also have appreciation over time in a market that has seen very strong demand from buyers and renters alike. Now, when all 3 of these, right, are working together, it's a 3-pronged deal. The deal is almost always a strong one. And one of the easiest rule of thumbs that we use is wanting 15% of the sales price to equal your total revenue. That's what I use for my own personal deals when I'm scouring the market and trying to see if it's a good deal. Now let's talk about what my client actually brought to the closing table. Total closing costs on the deal came in at $26,559. There was no seller credits that we were able to negotiate. However, there was $2,855 in adjustments and other credits that were given back to the buyer at closing. And these were just prorated credits that came through based on the time of the year that you close. It's pretty standard for every transaction. In this case, it actually includes prorated county taxes, school taxes, as well as HOA dues that the seller had already paid through the end of the year for, so then they were given over to the buyer. Now, those credits subtracted directly from what the buyer needs to bring to the closing table, so it was actually less money that they have to come in with. And after everything was accounted for, total cash to close, total out of pocket came in at $71,814. That was down payment plus closing costs minus the adjustments and other credits. So just under $72,000 to get into a $504,000 5-bedroom Airbnb in one of the strongest short-term rental markets on the East Coast with just a 10% down payment, a 30-year fixed interest rate, and a 7.25% rate. That's the full picture on this deal. Second home financing, 10% down, strong short-term rental market that is likely to appreciate, and a monthly payment that the property can cover, and then some when it's being run the right way. The buyers that I see who understand how to use financing correctly, have the right team behind them, are the ones who continue to keep it building, not the ones waiting for a perfect interest rate or a perfect price. They're actively finding deals that make sense with today's numbers, structuring them the right way, and just letting the asset do the work. If you want to understand what second home financing looks like for your situation, or you want to see how we can structure a deal like this for you, go to rclending.co or find me on my Instagram at Richie the Lender. My team and I work with buyers just like this all over the entire country, and we will walk you through the entire process from start to finish. I appreciate you guys for watching. If you haven't seen my other Deal of the Week videos, you can click either here or here to check out last week's Deal of the Week video, which was a really good one. So make sure you go check that out. Like and subscribe to the video. I will see you guys in the next Deal of the Week.